Good morning, traders. Welcome to the market forecast. Today is Wednesday, June the 23rd. Lacey just won't give up. She loves to be on the camera. Good morning, everybody. I'm John Hoagland with Lacey. Thanks for trusting us with your time. As always, we're going to be looking at these markets through hopefully accurate context, looking through the lens of risk management, and of course, exercising extreme patience. As always, it's going to be another challenging day. As far as economic numbers are concerned, this morning at 8:45 Central Time, the PMI composite flash due out. Not expecting to be too impactful. 9 o'clock, new home sales maybe somewhat impactful, of course. Lots of folks keeping an eye on the housing sector. 9:30 EIA petroleum status report due out. And aside from that, there are going to be several talking Feds throughout the day today. Stocks kind of mixed early in early trade. Investors await more Fed speak after Powell's downplaying of the risk of tightening policy at an earlier date, I should say. Crude prices remain strong after the API shows another draw of 7.2 million barrels. In less crude stocks here in the U.S. Vacationers starting to take to the roads. The EIA estimates a 3.1 million barrel draw. We'll have to wait till 9:30 to see that. Crude pricing already at the highs from the overnight, looking like they are opening with a gap. That's always something that we're looking forward to seeing, because it provides us some context and some opportunity. We'll see that in the charts very shortly. Apparently, Iran has prematurely announced that the U.S. has agreed to lift all sanctions on Iranian shipping and oil sales. Officials from the U.S. saying not so fast, not so fast. So we've got that as a potential headline risk for us, is for our crude traders this morning. As always, like, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. A brief look at the VIX this morning. It was down about 4% at 1599, with the NASDAQ basically putting in another all-time high in the overnight session. Of course, we'll see that very shortly here in the charts. Dollar index off a little bit, back down below 92 at 91.65. And the 10-year yield slipping a little bit, down below 1.5 at 1.48%. And I'm always looking forward to Wednesdays, because that is the day that we get to sit together for an hour, 1 p.m. Central, the group coaching session. I've posted the link a couple of times in there. I look forward to seeing all of you there, and I haven't received any email questions just yet. So, we've got an hour approximately to sit, talk trading. It's one of my favorite times of the week, as I mentioned. I get to sit and talk trading with traders. So, looking forward to that. Tomorrow we have the GDP number due out. It's the third estimate. It's probably not going to be that impactful. They should be pretty close to where they think it actually is by tomorrow. So I'm not really looking for anything huge from tomorrow's GDP number. No sound. Vince, hopefully you've got sound now. Hopefully everybody does. Got to say good morning to everybody, as always. Brian, first in the room, you win the prize. Theo, good morning. Good morning, Murph. Yesterday, a tough one. Today's going to be better by the looks of things. Hopefully you are right. Tone, good morning. Caesars, Ednelson, happy Wednesday. Jorg, good afternoon, good morning, wherever you are. Laura, Zurain, good morning. PK, Vince, good morning. Hopefully you can hear now. Greg H., today is the day in which I will always have a stop loss in and not move it. Today. Good idea. That first idea for the stop is typically the best idea for your stop. Good morning, Keith, Ryan, Vici, Norman. Good morning, Dr. VJ, Greg, We love seeing Lacey. I love Lacey too. I don't know where she is right now. She's probably getting into some kind of trouble. She wouldn't leave me alone, and now I can't even see her. Maybe it's because she knows I'm talking to you guys, and she gets upset when I'm not talking to her. Nico Torres, the chef Magallanes is here. Joe with the Angelina Trading Research. Jose, no sound. Well, Vince, hopefully you've got sound now. Vici got sound. Jason Cargill, buenos Wednesday, everyone. Tim G, good morning. Jerry is awake. Hopefully I am too. Brad Generous, love the name. James, good morning. Angelina, Greg H. Nemo, good morning. Sign up for the group coaching. You'll get my email there. Then you can email in a question. The email is right in the link there, so you can email in a question. It's back on. Good. George, JMT sounds good. Mark T, good morning. Happy hump day, of course. All right. Without further ado, let's take a look and see what we're seeing in the charts today. As always, we'd like to start on the daily in crude. It appears as though I have solid charts this morning, so that's a good thing, and we've been wrestling with those a little bit. And now that I've said that, watch, it'll go out on us again. Solid all morning. Hopefully I've exorcised the gremlin. Juan, greetings from Colombia. Welcome, Juan. Glad you're here. All right, let's jump into the charts and have at it here, shall we? All right, here's the crude, obviously. We've got a nice rally going on for quite some time that it appears to be attempting to accelerate. Rollover is now over. We lost 31,000 in open interest. A lot of that is, of course, due to rollover, but now we don't have to worry about it anymore. It was only a 10,000 contract loss in the August contract, so the fact that we didn't bring in higher volume or bring in more open interest was of interest yesterday. I think we're going to be beyond that a little bit for us today. As supply tightens, demand increases, we're going to see pricing continue to move to the upside. Yes. That is, which is support becomes resistance, and charts are no acceptance. Absolutely. So we've got our weekly kickoff high here it's at 72.75. Basically, last week's high. We have closed above it for a couple of days. We are keeping that as support for the overnight session today. Without some sort of change, I mean, there's no other reason, there's no other thing to do than to look for opportunities to buy weakness in this market, even if it doesn't give you the opportunity. Sometimes buying begets more buying. Now we've opened in the regular trading hours. We have some considerable longs here. Settlements at 72.85. This is our first settlement above that level, second settlement above that level. We've got some considerable longs in the overnight here. We've opened with a gap. If we cannot close the gap, then we continue to see buyers coming into this market, moving price higher. This overnight inventory, if anything, could bring us an opportunity for a cheaper opportunity to buy a weakness in this market. So we're going to be watching the opening range. Looks like it might be the low of the session. So we watch that opening range. If we can't take out that opening range and close the gap to the high from yesterday's range, then we're going to probably see buyers continuing to come in to move this market higher. If we close the gap, that may be enough to frighten some of our overnight longs into giving us a better opportunity for a long as the day goes on. So important spot right here. We're right where we are right now, right where on the opening tick. If we break that, if we close the gap, then that gives us an opportunity to maybe relax a little bit. And again, take advantage of the overnight inventory to the downside and to look for opportunities at cheaper levels for a continuation to the upside. And that's pending we hold weekly kickoff high as support. Like Murph says, what was resistance should become support. We'll see how that plays out for us. E-mini S&Ps now. Volume and open interest has been slowing at these all-time highs. We have been yet to be able to take out the previous all-time high, which occurred in the overnight session. We have a 17,000 contract loss yesterday on lower volume with higher pricing, indicating that the upside auction is tiring. Now, what's going to happen if we just continue to cut off volume up here is we're going to have to move lower to find opportunities, to find two-sided trade. It's going to take new business, new buyers, longer time frame buyers to come into this market and have to adjust inventory above our current weekly kickoff high and above last week's high. The all-time high is in sight. It seems to be struggling to get there. We're always thinking about what is the market attempting to do and how good of a job is it doing in getting there. I wouldn't say that the market is telling us that it's really doing a good job. We have lower volume here. We have lower volume yesterday. Open interest not indicating money coming into the long side. There may be a little bit more of a pullback or consolidation needed before we can continue our march to the upside. Take a look at the 30-minute chart here. Okay. Lacey, what are you doing? Come here. She's got something she's chewing on. Come here. Come here. Well, I can't do anything with it right now. All right. So where were we? We've got the market really kind of inside value from yesterday. No real overnight inventory to speak of. Settlement 42.36 quarter. We're within a few bucks of that. We haven't really moved any direction really in the overnight session. So it tells us, there's a higher probability of better trade locations happening as the day goes on. Inside the value area, try and stay patient. We've got our overnight low pretty close to the point of control from yesterday. Our overnight high pretty close to value high from yesterday. These might be interesting areas for early opportunities for us. Again, with no overnight inventory, in the condition that this market is in, I'm going to be kind of perhaps a bit focused on the opening range, that first minute of trade. If it remains the low of the session, we may go ahead and look to take out that previous all-time high that occurred in the overnight session. If we leave the opening range at the high of the session, that may give us an opportunity to buy this market at a weaker level, at a lower level. So, as always, we're going to try and stay patient. There's a certain urgency that I'm feeling or sensing in the S&Ps today and in the NASDAQ, of course. And the opening range usually will offer a cheap opportunity. So we watch that opening range first minute. If it breaks out above, we look to the long side. If it's a loss, it's a manageable loss. And then we start to look for opportunities at kind of shorter time frame levels as the day goes on. We're not seeing big jumps in open interest, which tells us that would be longer, stronger, longer time frame traders getting into this market. So it's going to be an interesting one. I think, Murph, you're right. It's going to be a good trading day, but I think it's going to be kind of hard to see. Hard to see. All right. Well, we've got finally the NASDAQ presenting as the stronger of the indices. It continues pushing all-time highs on higher open interest. So we lost volume yesterday, but we added open interest on a new all-time high yesterday. That's good news for a healthy upside auction. The weekly kickoff high is in play. We tested it last night. 14,300 is that level. It's going to be pivotal for us today, of course. It should be resistant. If it is not resistant and we accept above it, it should become support. Take a look at the 30-minute chart. Okay, all-time highs in the overnight session. Again, markets don't tend to leave that way. So do we have any overnight inventory with which to work with? We do not. Are we going to open with a gap? Low probability of that. So we're going to be looking for opportunities to buy weakness on short time frame levels. Settlement, value high, point of control, last week's high. Lots of targets to look for opportunities down here. If it were me, I'd be looking to try and get to my favorite level first. And if we don't get there, use the reference of those lows to look for opportunities to the upside, if that is your strategy, if that is in your hypothesis for the day. It's going to be interesting to see if we can get up to this 14,300 in the regular trading hours and see if we can take out this all-time high in overnight extended trading hours. And to gold, volume and open interest continue to shut down at these levels. We're in the fourth day of balance. Change is probably going to be coming soon. With the way that the volume is dropping off, this price is failing to provide two-sided trade. It's failing to provide the opportunity for traders to transact business here, and price will move to a level that it will create more opportunity. The 4-day balance is in play. There is a rule that comes with this. You fade extremes of the balance until there's acceptance outside of the balance, then you go with it. Is this potentially creating a bear flag? That's one of the questions that I'm thinking of this morning. Now, in the 30-minute chart, we've had some coiling activity going on. Lower highs, higher lows. We've had an attempt to break out above that this morning, which did not play out. Perhaps because we have some pretty long overnight inventory. Settlement is 1777, 1777 and 40 cents. Some of these overnight longs probably getting a little nervous that the market was unable to hold up above this level, starting to unravel to take us back down towards this settlement line, which is also a target-rich environment. We have value high. We have point of control from yesterday. We have settlement, and we're going to be pretty close to this lower trend line of this pennant formation if we get the opportunity to see price at that level. So I'm going to be cautious because we may have some overnight inventory adjustment. We get down to this area. There's fish here. There's also fish here. Which one are we going to catch the fish at? And for the euro, what goes for gold goes for the euro. We're seeing a little bit more of a potential bear flag being created here. We're going to need to hold this lower line for this bear flag to be a failure, to be a turn, I guess you would have to say. It's a little less of an area of value or balance here. We only lost 600 in open interest yesterday, but still, volume and open interest continue to drop here. There's a change coming. Bear flag? Well, again, we need to hold this lower line. Take a look at this on the 30. Okay, so a bear flag, basically going back to the daily chart. We've got downward movement. We've got a couple of days with smaller ranges, lower volume in the opposite direction. If that lower line fails, it could bring a new leg to the downside. Here's what it looks like again here on the 30-minute chart. So here's just the beginning of the bear flag. Here's the lower line. Haven't put an upper line on it just yet here, but I'm going to go with, it's probably going to be around here. There we go. So as long as we keep ratcheting higher and we keep holding this line, we can continue to move to the upside. What are we looking at here on the 30-minute? We don't really have any overnight inventory. The market doesn't appear to have left a gap, but it still seems to be continuing to move to the upside. It's kind of a random walk here. We've got 1, 2, 3. Where's our fourth step? Our fourth step could be all the way up to this upper trend line, and then we've of course got weekly kickoff high just above that. All right. And the 10-year. Short time frame control remains as price is really centered in balance. Last week's high and low, weekly kickoff high and low, we're pretty far from them. The market really kind of falling into range and balance. Lower volume, 4,700 contract increase in the estimated open interest yesterday. Nothing hugely impactful. Range bound rules. The rate's just kind of floundering again, right around that 1.5%. Here's the 30-minute chart. See if we can find any help in this. Watching this morning earlier, no overnight inventory, back in range from yesterday. I was thinking about the overnight low and the overnight high being really the first opportunities for us to see anything worth looking at. We've taken a look down below this by just one tick or half a tick. I like the value low here, as long as rates still kind of hold up. They're off a little bit this morning, so you're gonna be cautious, be careful in my decision making here in the 10-year this morning. Somewhat still off the radar because look where it is. Short time frame levels likely to be impactful. Value low from yesterday, within a tick of the overnight low, kind of pulling back from that now. I don't know. It's going to be, as always, an interesting and challenging trading day in all of these markets. And I always look forward to the opportunity. I look forward to the challenge, and I know that you do too. Wednesday, looking forward to group coaching at 1 p.m. Central. Make sure you sign up and bring good questions. Nobody knows everything. I don't claim to know everything. If there's something I can learn from you, I really appreciate that. It's one of the things that I really enjoy about group coaching on Wednesdays. And then we should see Dan for the market forecast at 3 o'clock. Other than that, I'm going to take my deep breath. Be humble, grateful, and creative today. Jerry is awake, is talking about the coach beta that reward to risk tells me I need to work. I'm going down the wrong rabbit hole, doing the old adage wrong. I eat like a bird and crap like an elephant. Thanks for the coaching. Yes, of course. You certainly want to be looking for opportunities that offer greater reward than the risk you have to take to get into them. On that note, let's get out there and profit. Trade well today. I'll see you at 1 o'clock for group coaching. Looking forward to seeing you there. Trade well. Have a great day.